on 26th of February, and let's get started off with let's evaluate gold first. We'll spend some moment on what the price action looks like and what the waves are telling us a story now. It's quite interesting to see we've adjusted counts in gold from the last two sessions onwards. The preferred count in the yellow metal now remains we've got the primary 1, 2, 3 and potentially 4 in place around the 25 25 40 25 30 zone, and since then uh, wave 5 on the wave 5 is unfolding. All right, that's against 20, to be precise, 2537 lows. Now if that's the case, then we've also relabeled the wave structure since 2537 lows. It's been minute 1, minute 2, minute 3 and potentially minute 4. Now we are looking to settle somewhere around the 2800 zone. All right, now going forward, if we look at the lower degree time frame, that is 4 hours, then it'd be more more conducive. Let's look at the wave structure on the hourly chart now, because that's where it's subdividing into waves here. The earlier drop to 29 28 28 2888, that was yesterday. You can see the subdivisions can be made as an A, B, C sub-minute degree. We've got the minute wave A, and then we were expecting a minute wave B, which is also ready. And if you look at that wave structure since then, it has been 3 down and 3 up. So minute wave C might be underway and could be unfolding as a diagonal. Remember, diagonals are also seen in the C waves, and they unfold as 33333 structure. They are a 5-wave structure, but each wave kind of subdivides into 3 waves. So if wave C is underway, then possibly we've got the first wave and then the second wave, and now we are looking at wave 3, 4 and 5. All right, so if minute wave C is underway, then we will be looking for price action towards 20, 2840, possibly 2810 going forward, which is also the 38.2%. All right. So the alternate count for wave B is maybe we could have a rally to 2930 and then reversal from there. Right now it looks more probable that wave C is already underway and the pressure is going to be on the south side, and it would be against 2957. To be precise, this high 2957, yeah, 2955, 2956. So against 295657, Aggressive traders, we are already short in the portal as well, and we would want to remain short with a stop around 29.59.50, the previous one, with potential target around the 28.40 and 28.10 respectively. All right. So that's the story, and having a look at the larger degree once again. So it is minor wave 1. To revisit the counts, we've adjusted minor wave 1, 2, minor wave 3 and minor wave 4 now in place, potentially around the 25.37 mark. So please do not consider an expanded flat ABC in the making, which could go towards minor, which could take minor wave 4 to 2500 levels that we were contemplating earlier. At least for now, the price action suggests that minor wave 4 could be in place, and minor wave 5 is subdividing into 5 waves higher, possibly towards the 3200 mark. All right, so the short positions that we have taken remain until the 2800 mark. After 28, possibly we are going to turn or flip on the long side and carry it over through the 3000 range, possibly 3100 range, or even higher. All right. So that's the story for gold, at least for now as we speak. And I don't think the price action is confirming any other story in terms of the. I don't see any impulse or five-way movement until now, except something changes structurally from from the recent drop between 29.40, and if that is wave 1, 2, 3, 4, 5, but it's going to take time for gold to confirm that it's doing or it's wanting to do an impulse lower and dig further below 2800. At least now we are expecting a corrective ABC. Let's see how the price action is shaping up going forward. Sorry, all right. Now, yesterday, not yesterday, but in the NY session 2, we revisited most of the indices. Let's do that again. So the shorts were recommended that's the Dow Jones hourly. And if you remember, we had plotted wave 4 around the 43,800 zone. Recommended shorts were also, shorts were also recommended partially over there. We are now getting around 500 points of cut, just about 500 points of cut. So short-term intraday traders might want to take their profit around the 43,300 zone, uh, or because it's a catch situation. I mean, if the consolidation is going to continue, that could be A, B, C, D, and another leg, wave E, before the wave 5 goes on. So maybe today, we still have a couple of days to go according to the Eastern time. But according to Asia, we've already started Thursday. So in the next 2 days, if it rallies up to 600, maybe you can have another opportunity to add short positions, and by Friday it drops lower again. All right. So the first soft target in Dow Jones looks to be around 42,700 or so. and the bears are firmly looking in control, quite firmly looking in control, and there's no change in the wave structure. The wave structure is minute 1 right there, not right there, but just a bit, yeah. You've got minute 1 and then expanded flat minute 2, and theoretically, if you look at the second waves, they might go as deep as what Dow Jones has done right here, giving us a very strong feeling. Remember, if you remember our past sessions in Dow Jones, we were also kind of waiting for a new high. I don't know if it is just print a new high by 1 or 2 points. Even if it has done, we are going to simply change this to minute wave 1 and 2, and the third wave is underway. All right, so we simply need to change the minute wave 1 from the earlier 42,000 to the recent one. All right. Bears are looking firmly in control. That's what is the conclusion. And the trading point of view, it's good to remain on the short side. In fact, if once 42,000 hits hit, we might want to book some profits and wait for a pullback to re-enter. I tell you what, like the Euro USD and the dollar index and Great Britain pound, these indices, Dow Jones, Nasdaq, and SPX 500, are also projected and slated for the longer term. So, so if you understand what I'm trying to say, is always keep some positions on the short side for indices because they are they are going much lower in terms of magnitude and in terms of time. All right, so that's the story for Dow. Let's look at SPX 500 now. I don't know if SPX has already. Yeah, it is. It is unfolding wave 5 possibly right after. See the bears when the bear market is in 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 full bloom. We are always going to see markets dropping or tanking like that. But that was the opening of the New York session, and by the time it was just about to close, we started we we print much lower levels, right? So now from now on, this is what is expected to happen, and the only question is, do we have wave 3 in place or still the wave 3 is continuing? More probable chances are that we've got minute degree wave 3 in place, minute wave 4 is unfolding, and possibly minute wave 4 can go and terminate around the 58, 52. We've still got 2 trading sessions for price action to do that. It's not compulsory. I mean, I'm just trying to allocate the time that we have left for this week and the price action because it's mostly on a weekly or monthly basis where prices would want to remain in that particular direction. So tomorrow, by tomorrow, if it is hitting 58.50 or even a bit lower, it makes a lot of sense because a major support is also gone, and maybe a couple of weeks in March it rallies or a corrective way, and then reverses lower again. All right, so short in SPX 500 as well. Nasdaq, we already initiated shorts in the portal, but we are waiting here. I think it's already into the fifth wave. So yesterday when we were doing, not yesterday. I'm sorry, that's always a confusion between the Asian time and the Eastern. The New York session 2, what we were discussing was let it complete the 38.2% or the 61.8% Fibonacci extension as a target, and we will reposition ourselves on the short term. One more pattern which I would like to emphasize here when we've had the Nasdaq chart on screen is possibly we are having a head and shoulder reversal as well. One of the most conventional patterns. And when we talk about the waves or the elite waves, everything is covered. Whether you talk about a head and shoulder or you talk about the 5 down and 3 wave structure. So just imagine 5 down would break the neckline, and then 3 up would carve the right shoulder of the proposed head and shoulder structure. So things are kind of looking like not a March decline, but maybe a March corrective wave, and that would be one of the biggest opportunities we are going to witness in 2025 with respect to the indices. All right. So these three are in our radar now, and most global indices. I don't know if it would be good to add some global indices as well, like the FTSE or the Euro stocks or the Australian, but we'll definitely look to add those indices as well because it's a global story that we need to cover and we need to keep track of. All right, so that's for the indices and gold. Uh, Before going, because euro, dollar, index, and pound are almost the same story. Before stepping in there, let's have a look at Bitcoin, please. That's an amazing one, isn't it? 80 was expected as a fifth wave, and we've gotten that 80 right in front of us. In fact, we were aggressively going to sell. We were proposing a short there. Uh, Now I'm going to readjust the counts. We were actually discussing to sell around the 88 zone around Tokyo, Sydney yesterday with a potential target of 81, and that has been met. So one thing which is becoming quite clear now, it is either the third wave extension or wave 5 are now complete from the top, that is 109k. It looks like the third wave is extending, and if the third wave is extending, the drop is not going to pause here. So one thing that we need to now start looking at, let me remove this Fibonacci. And what we are going to focus now is on the 5 wave decline that we've had from the 99 mark. All right. I think we can keep those 5 wave count because that's when it all started. I categorically remember we were discussing about a gentle warning about what Bitcoin could do, and that's what precisely it has done. Let's keep this 5 wave drop as it is. It could be the beginning of a new trend as well, and it could be uh, a part of the expanded flat structure as well. I'm not ruling out that option now. Let me quickly have a view at the RSI first. Okay, RSI is not looking bad in the term that it has kind of produced a bullish divergence. Not very strong though, but a bullish divergence is a bullish divergence, isn't it? There you are. Here it is. There is a bullish divergence in place. Price action dropping lower, and that's not been reflecting on the RSI. Okay, let me have a quick look at the 15 minutes time frame if we've got an impulse. No, sir, we don't have an impulse yet. It is corrective, and it would not be conducive for us to commit any time on the long side now. We still need to wait for a potential bottom to aggressively recommend any longs. All right, and I believe shorts are good to be taken. Maybe there's going to be one more low around the 81,000 mark to complete that five-wave structure from 96. One of the simple strategy that comes to my mind looking at the Bitcoin structure right now is that we do a trend line first here. That's the trend line. And if prices are going to follow this trend line, then it's going to be a sell on rallies going forward. And let's wait for 81,000 to be taken out, or about 80,000 to be taken out. Let's prepare to go long. Maybe if you're an aggressive trader, we can have some limit order in place around the 81,000 mark. And then I'm going to do a retracement up there, a Fibonacci retracement. The recent drop, 5 waves, and that retracement, we are going to now focus. If we buy around 81, then it can give us a chance towards 92 to exit. Remember, that could be a counter trend rally, all right? So it's going to be an aggressive rally. And then from 92 onwards, on a turn, we actually prepare to go short again. That's what is the trade plan. So we would be keen to watch out for the Forex, watch out for the signal coming out from the portal. We might be keen to get into an aggressive mode around the 80 once I see an impulse on the lower degree time frame. Then carry it over 92. So that's the trade plan, and it's a decent one according to the theory. Fifth way, we buy, take it across the ABC towards 92, and then we reverse or we exit and stay aside, watching for what the price for the next price action could be. All right, that's the plan for now. So we'll be watching across the 80,000, 81, 80,000 mark. And it also matches with the equities that we've just saw. All right, maybe today and tomorrow, by today and tomorrow, it drops towards 81 and then gives us a chance to go long aggressively. And if we don't go aggressive, we simply stay put, wait for 92 mark, and we sell there. That would be a good one and a safer one actually. It's not that we will buy just after hitting 81. We will wait for an impulse wave higher before committing on the long side. That's for sure. All right, Solana. could be on the same lines actually. Solana, no different there. In fact, Solana might have just completed its its drop already. That was a good triangle structure, and it is also now completing 5 waves lower, or I think it's digging wave 4 a bit sideways. I tell you what, Solana must be producing an engulf. Oh, that's already a good diverging scenario. At least we are now, at least Solana is now preparing for a counter trend rally. We just need to wait for one impulse structure. Let me have a look at what the structure. Uh, if that is an impulse, I think that another impulse is also complete that could be pushed here, wave 5. We are just looking for a 5 wave structure to push a trade in the portal. But since it's going to be a counter trend, we won't be committing unless it has produced an impulse and a retracement or a pullback. So we allow the market to take out 150, 146 and then a pullback before we start committing on the aggressive side as well. There's nothing wrong in going aggressive. The only thing troublesome is we are not very sure at to what level the prices would go and turn. And on the other side, to remain towards the trend, it's always easy because we know that the turn, whenever it comes, it's going to fetch us huge profits or yields towards a major direction. All right. So at least for now, we hold ourselves committing either coins for a while, and let's now focus our attention quickly to the euros and the dollar index and pound. It goes without saying about the trend. Remember, during the New York 2, we've adjusted the wave counts, not changed. We've just adjusted and relabeled. We are now putting or placing one higher degree structure. That is, we've got wave 1 of a minute degree and wave 2 of a minute degree in place. Wave 3 of a minute degree is underway, so the structure remains bullish. Now, trading point of view, that's the only question because there's a lot of sideways action going on. Now, this could well be a structured triangle A, B, C, D, and E, or it is A, B, C, D, and E. Whichever way, if it's a bullish triangle, it's going to go. Euro is going to go straight from the current price towards 580 or 590. But I would suggest partial loans being initiated right now if you are still wanting to get into the trade and have some space for 350 mark with the stop loss around 1.02 and potential targets around 1.066 06 and 1.07. 750 and 1100 is what we are still recommending on the upside for euro. All right, and for the dollar index, the stop recommendation goes towards 109.85. Again, the structure is just relabeled with the minute degrees or minute degrees removed. And we've got now minute 1 and 2 in place. Minute 3 is going on. I would not be surprised if we see 105.60 first and then a pullback. All right, so trading point of view, if you are inclined to with the risk around 109.58, and if you're wanting to take fresh positions, take some partial right now, but keep some space for 108 counter trend rally and that could give us a wonderful opportunity to get into the train. Remember, brothers, if the third wave is extending, extensions are the most powerful patterns which work out in the wave structure. So that is an extension. Wave 1 is just about to be complete, and wave 2, whenever it does, it's going to give us, I think, the best opportunity for 2025. All right, and pound, I think pound should also be doing sideways. These sideways action actually just indicate that we've got to be patient. That's what. Pound is inching higher. It actually hit 27 and possibly now pound is well poised. Now see the structure in pound. I've been telling time and again. Pound is structurally more stronger looking in terms of the euros and the dollar index. Let's remove this corrective wave for now. This structure is looking like a diagonal where we've got wave 1, wave 2, wave 3, 4, and 5. So if it is a diagonal, we are going to see a witness a fifth wave rally right through the 2800 mark. So please hold on to your longs and stay put on the north side. For those who are wanting to buy fresh, might want to wait a bit because we are approaching the first target almost 2800. All right. But the next possible entry is going to be towards the 2500 or just about 2550 or so. With a stop loss around 1.2250. We don't change that for now in all three instruments. All right, sir. So those are the stories which we just covered, including metal indices, coins, and currencies. We would be more inclined to add indices, global indices, because the story is is going to be global. It's not going to be just confined to the major indices of the US or anywhere. It's going to include all global indices. All right, sir. So let's bring the current one to a pause. And once again, thank you for tuning in live. We would be coming back during London times now to continue the story where we are leaving it here. And as always, until the next one, please do take care and God bless. Goodbye.